Hello, hello, hello. Good evening, everybody. Good evening. Hello, world. What's going on? Hopefully, everybody had a good Valentine's Day. I don't know if you say Valentine's or Valentine. That's the big debate. Valentine versus Valentine's. The weather is just brutal. It's been snowing all day. It's been snowing most of the weekend. The stock market was closed today. People who are traders know that anxiety that exists when the stock market is closed. It's like, dang it, I can't make any money. Or, I don't have the opportunity to make some money. So, but hey, tomorrow the market will be open. Business as usual will resume from a stock market standpoint. It feels like time has just paused here with all the snow that we've gotten. And then, like I said too, you can't. The stock market wasn't open today, so it's kind of a boring day. Unless you like the snow, then you would have gotten out there and gotten in it and did whatever you do. Those days for me are over. I don't play in the snow anymore. I don't like the snow. I'm not into snowball fights anymore. I don't want to go sledding. I don't want to do any of that. I just want to stay on the inside, stay warm. But that's not why I'm here tonight. I'm here to talk about the stock market and 3 key fundamental indicators to look for when you want to find a stock to trade. That's what I'm going to cover tonight. Because you're only as good as the stocks you trade. If you trade a bad stock, you're going to be a bad trader. Or the probability of having a bad trade goes up with a bad stock. And there's certain things you want to look for when you are looking for a stock to trade. There are 3 key things that I think are very important that anybody who wants to trade a stock should look for. Now, it doesn't mean that these are the only 3 things to look for. Trading stocks is more of a game of probabilities than anything. So the more cards you have in your favor, it's like playing spades, right? Everybody knows how to play spades, especially if you're black. Everybody's played spades. Most of us have played spades if you're black. So trading the stock market is sort of like a game of spades. You get your cards, after the dealer deals the cards, you get your cards, and then you look at your cards to see, okay, well, which cards can I pair up? how many spades do I have, this, that, and the third. Then you got to estimate how many books, you can get, especially if you're playing with a partner. You and your partner got to go in on books. Like, hey man, how many books you got? Or hey girl, how many books you got? It's the same as trading. Okay, the more spades you have, the better of a hand you have, the better chance you'll have at getting your books and winning the game. Well, the stock market is similar to that. The stock market is essentially similar to a game of spades, where with the stock market, it's all about accumulating enough information, enough of the key indicators, the key pieces of information. It's about building a case for why the stock can go up or why the stock can go down. And there are fundamental things you can look for when you want to, like I said, try to find a stock to trade. Say, for instance, you over the weekend, you take some time during the weekend, like I do. I have different filters and things that I have established to search for stocks according to specific criteria. Once I find those criteria, then I kind of do a deeper analysis on the charts to see, okay, is the price trading in an area where there will be more buyers than sellers? Because if there's more buyers than sellers, then that means the stock price is going to go up. So, I have my routine that I go through on the weekends. I come up with my list of stocks, and then Monday morning, I'm ready to jump on one of those stocks. Before the market opens that morning, I like to see what they call the pre-market session is doing. And then once I kind of see what the pre-market session is doing with the stocks that I've gotten as a list, then I dwindle it down to maybe about 2 or 3 stocks. And out of that 2 or 3, I'll watch those 2 or 3 stocks when the market opens, and whichever one of those stocks gives me a signal that I'm looking for, I jump in it. Now, what if they all give me a signal? Then you simply just pick the first one you look at. But like I said, there are key things that you want to look for when planning on buying a stock, and that's what I want to cover tonight. There's more than one side of the trade. There's more than one side to trading stocks. It's not just all technical indicators, but as a trader, that's a big piece of it. However, there's fundamental things that you can look for to kind of plan out your trade a little bit better. And that's what you want to do. That's where I see most people who trade stocks fail at. If they do find a stock, okay, let's just say by happenstance, they come across something on a message board or something, like GameStop. They come across a message board and says GameStop is going to go up. All right, cool. Then what? What's your plan of entry? What's your plan of exit? That's probably one of the biggest things that traders fail at, planning out their trade. You have to have a plan when you want to trade stocks. You have to have a plan of when you want to get in, and more importantly, when you want to get out. Those are 2 important things. Because if you get in and you get out at the wrong time, then you can lose money. And nobody likes losing money in the stock market. Although it does happen if you're a trader, and that's my focus. I focus on trading stocks. That means I'm looking to purchase a stock in a very short time period of time, or looking to purchase a stock for a very short period of time, whether it be a day, a week, or a few months. I rarely hold stocks more than a year. More than a year's time frame, you're considered an investor, because the tax implications are different with investing, with people who hold stocks longer or a year or more. You pay lower taxes than you do when you buy and sell stocks in a shorter time period. Say, for instance, you buy a stock and you sell it in under 12 months. Then guess what? You have a higher tax implication that you have to pay out for what they call capital gains tax. But that's down the road. That's in, I'm not a tax advisor, so I don't advise people on what to do from that standpoint. However, that's part of managing your trades, managing your position, So let's see who we have in the comment section, or who we have on the live tonight. If you're here, leave a comment in the comment section. Like the video, share the video, share it with your friends, share it with people that you have expressed to you, hey, I wish I knew how to trade stocks a lot better, or I wish I knew what to do. Well, that's the purpose of my videos. It's to help you. It's to help the average individual learn how to trade stocks. What are some of the basic fundamentals? Because if you don't have a good basic foundation of the stock market, how it moves, what drives it to move, then you won't have, then your house will fall. Everybody knows the story. If you don't have a good foundation, the house crumbles. And that's what a lot of people who trade stocks, they don't have a good fundamental understanding of the markets and how they move and why they move. But when they get into it, like right now, and during a bull run, everybody's making money. You can simply just throw a dart at a dartboard, have it land on the stock, buy it, and if you hold it, with a relatively substantial amount of time, or for a relatively substantial amount of time, the stock will go up. You'll make money. However, when the tides turn, or like I said before, if you don't have a plan and you don't know where to exit, then you can turn a 30% gain into a 30% loss. Hey, what's going on, Sis? I see you in the comments section, and you're welcome. I enjoy doing this. I enjoy it. So, like I was saying, there are a lot of things to invest in. There are a lot of things to trade in the stock markets. So, I'll go ahead and get into it. I do have some bullet points on what I will cover. So let's get to it. Let's see here. All right. That's the wrong one. Oh, no, that's the right one. All right. So, what are some good fundamental things to look for when you want to find a stock to trade? There are 3 fundamental indicators that you want to look for when you're looking for a stock to trade. Okay? One of those is earnings per share, and I'll go into definition of that. Another fundamental indicator to look for is institutional sponsorship, meaning our institutions, the big boys, the hedge funds, the pension funds, the mutual, money market funds, not money market funds, I'm sorry, the mutual funds, the ETFs, exchange traded funds, are they taking positions? Are they buying shares of the company that you want to buy? Do they have a substantial stake in the company? And there's a percentage that you generally want to look for. So I'll cover that. And then another key indicator, The importance of a stock catalyst. Now you say, what is a stock catalyst? Well, a stock catalyst is some type of news that comes out on the stock that speaks to a change in the fundamentals for the good or for the bad. There's a good news story on the stock. Say, for instance, Amazon, starts up a new service. Okay, well, that can ultimately affect their bottom line on the positive side because it gives them another area to do business that can be positive. So that's one thing that can be looked at from a catalyst standpoint. So when the news comes out, that causes a frenzy for everybody to want to buy the stock. So that's I would say the third thing. And then I'll cover also what are the best time frames to trade for swing trading or day trading. Now with trading, trading sort of fits different people's personality. And I tell people all the time, you want to just try different things. Try out, swing trading, meaning buy a stock one day and then sell it the next, in another few days or another week. Or, if you are into, I would call it the fast money, and you want to day trade where you want to capitalize off of price swings in that same day, then you can do day trading. I will say day trading is very hard. It creates a lot of anxiety. So if you're someone who has, anxiety issues or you worry a lot, you shouldn't be day trading. If you're not, if you don't like risk like that. So I'll cover that because there are different time frames, meaning like a day, an hour, or 5 minutes, 10 minutes, 15, 20. I'll cover that. I'll also just briefly cover the different phases a stock trades in. So I'll cover that. And then I'll give a pro tip, sort of something to help steer you in the right direction on an area to look for good stock. So I'll cover that. So these are the things that I'll cover. Let's see here. These are the things that I will cover. So far, let's see. Does anyone have any questions? Who do we have in the comment section? Uh-oh. Looks like I lost connection temporarily. I'm back up. I'm back online. I am back online. All right. How many people know that when you're doing something new, you'll have, what is that, Newton's law? Anything that can go wrong will go wrong. Do I have a favorite market pattern? I do. There's one called, I have a couple. There's one called the descending wedge. There's another one called the inside bar or a bullish engulfing pattern. There are a few patterns that I look for. And I'll go over those at a different time because those generally get into looking at the charts in particular. So after you've found a stock that you want to trade, you've gone through your list and you've narrowed it down to a couple, and you're looking at the charts for them, then you can look for these particular patterns to see if they're coming up. And then you can also search for those type of patterns as well with a with a good stock screener. So, first of all, let's go over what earnings per share is. So, what is earnings per share? The definition of earnings per share is simply this. It's earnings per share is calculated as a company's profit divided by outstanding shares of common stock. So, when after they do all the the booking and accounting, and they come up with the stock's profit that they made over a quarter, okay, because they break it into 4 quarters. There's 4 quarters in a year. They have a yearly range, and then they have a quarterly range. And the quarterly ranges simply add up to the yearly range. But earnings per share simply is if a company issues stock, and the reason a company issues stock is because they want to raise money. That's the whole reason a company goes public. They want to raise capital. Okay. They want to raise capital for the business. So they issue shares, and they have what they call outstanding shares, right? And then they have the shares outstanding float. So what that is basically if company X, let's just say I come out with a company and it's, B Diddy's, I don't know, fashion wear. And I go public with my company and I issue 10 million shares. Those shares are outstanding. That's what they call the float. So that means anybody who wants to buy shares of my company, regular individuals, hedge funds, all these participants in the regular market, whoever wants to buy shares of my company, I have 10 million shares to trade, meaning 10 million shares that people can buy and sell. Okay? So essentially, earnings per share is the money that the dollar amount that I made per quarter divided by the number of shares that I have outstanding, and that gives me a numerical value. That numerical value is what's industry wide. Everybody uses that. It's not a secret. Earnings per share is what companies, report on, and if they have a good earnings call, meaning they made money in that quarter, then that essentially says their stock is worth more than the current price it's at, because fundamentally the bottom line of that equation changed. Because we know that earnings per share is calculated by the company's, the company's profit divided by the shares outstanding. And if the shares outstanding are traded on the markets, then that, 2 plus 2 is 4. So hopefully that makes sense. So that's one key thing that you want to look for when you're looking for a stock to trade. So like how much, like what percentage? You want a company where their earnings per share increased at least 18 to 20%. Now I know that might be rare right now, given the time that we just came out of with coronavirus and, essentially the global economy's shutting down. People weren't able to make money. Now the big boys, they still made money because they were deemed quote unquote essential. So, but that's, here nor there. And that's one thing you want to look for. Like I said, you want to look for earnings per share and you want a company to be growing their earnings per share at a rate of 18 to 20% from their previous year's quarter. Meaning the first quarter in 2021 versus the first quarter in 2020, you want their earnings per share to be 18 to 20% higher than the same quarter the previous year. That's one thing you want to look for, because that can help. That gives you more weight to look at a stock to trade, because if they're making money, then the business model is working. So that's one key. Okay. Another key indicator to look for is institutional sponsorship. Now, institutional sponsorship. Why is that important? Well, I look at the stock market like this. The stock market, for one, institutions have a lot more money than you and I do. If you look at some of the biggest institutions in the world, banks, hedge funds, pension funds, these are institutions, financial institutions. If you look at their, the money that they manage, they manage billions, if not trillions of dollars in management. Meaning, the Warren Buffetts, the Jeff Bezoses, the money that they have that they put into the stock market. These institutions are managing their money as well. So, guess what? When they decide that the price is more valuable when they decide that the company is more valuable than where the current share price is trading, then the price will rise. And typically when that happens, you'll have more buyers and sellers. The stock market is a place where you have buyers and sellers. For every buyer you have to have a seller. For every seller you have to have a buyer. That's just that's supply and demand, essentially. You have to have, demand. You have to have more buyers to create more demand, and you have to have more sellers to create more supply. Right? So, you want to look for companies that specifically have at least 25% institutional sponsorship, meaning 25% of the institutions that deal in the markets. You want to have 25% of those guys parking their money in a company that you're looking to trade. Okay? Now that number can vary, okay, but generally speaking, a good barometer is 25%, right? Once you get more advanced with trading and things like that, you don't have to have it that high for a price to move. But that's for a later story. For the purpose of this video, anybody who's just getting started out, these are things that you want to look for, okay? These are things you want to look for. So, like I said, you have institutional sponsorship. Let's recap. You have earnings per share. You want that to be 18 to 20% higher than the previous quarter, the same quarter of the previous year. Then you want to have institutional sponsorship. You want to have the big banks, the big institutions, the big hedge funds. You want to have a collective of 25% of those guys who have, purchased shares of of the company that you're looking to buy. Okay. Then you want to have a stock catalyst. Okay. Now, why do you want to have a stock catalyst? A stock catalyst is important because any type of positive news on the stock is going to cause a commotion. It's going to cause, either a bunch of people to want to buy the stock or a bunch of people to want to sell the stock. Just because you have a news catalyst doesn't mean the stock is going to go up. A stock can go down on news as well. But that's what you also want to have. You also want to have a stock catalyst, right? You want to have a stock catalyst, meaning news come out on the company. You want the company to come out with news that, there's positive things happening with the company's fundamental business model. Now you say, well, what are some of the things that you want to see a company come out with? Okay, well, for one, you want to see a company come out with news on new products. Maybe they have a new product that they're introducing to the market, right? Or there are different analysts that, do deep dives on company fundamentals. These people are paid hundreds of thousands of dollars, if not millions of dollars a year to follow, that company and maybe others, but they get paid to follow the company and to learn all the ins and outs of the company, who the management team is, what's their history, what's the product that they have, how good of a product is it, what type of market share do they have, how influential is their market or is their product in the market that they're in, right? What else? What else do they, let me look at my notes here. What else do they come up with? So new products, let's see, new things. Are they merging with a new company? That's another key fundamental that you want to look for. Are there rumors about that? There's a saying in the markets: buy the rumor, sell the news. If there's rumors rumbling about a company, maybe beginning to acquire a company or things like that, that can cause interest in the stock price, or in a stock or company. That can cause interest in a company, and that could cause the stock price to go higher. So things like that. Those are some things you want to look for. Those are just a few things you want to look for. So to recap, like I said, there are three things, right? There are three things that we want to look for. Three key fundamental things we want to look for. 1, earnings per share. 2, earnings per share, 18 to 20% higher this quarter than the previous year's quarter. Institutional sponsorship, that's 2, of 25% or more. And 3, a news catalyst, meaning something fundamental with the company changed, so that can cause, the market itself to have a high interest in the company and acquiring shares of the company because they feel that the price will go up. So all three of those things represent, all three of those things represent what I would deem very important things to look for, because they tell a story. They tell a story about the company itself. They tell a story about the company's business dealings, that their business dealings are profitable. Tells a company story about, hey, what are the big guys, the people who really move the markets, and don't be fooled, institutions move the market. If a stock goes up 30%, that's due to institutional buying, meaning the big boys at least started to spark in the fire. Then the rush of retail investors, that's you and I, we see that the price is moving, we jump in, and the better a trader you are, the better you are at jumping in at a good point and jumping out at a good point to make money. So those things tell a story, and we want to be, and that's what makes a good trader. Can you as a trader understand, hey, where money is moving from and then to? All you're doing is tracking money. That's what trading does. That's, you're essentially tracking, money moving around in the marketplace. You're just tracking big money moving around. And those are some things, like I said, that you want to look at. You want to look at those three things. Okay. Next, what are the best time frames to trade for swing trading or day trading? So, let's do this. Let's go to the stock charts. Okay. Let's look at the stock charts. Okay, right now you're looking at, let me declutter the chart, that way it'll make more sense. So, what are we looking at here? This company is Tellurian. I don't know what they do. I think it came up on one of my filters, and I was looking it up the other day to see if it'd be something that would be a good trade. But what we want to look at here with this chart is simply this. From a swing trading standpoint, this is a daily time frame. This is what the stock price did Monday through Friday for the past, from or every week from February 12th until October 20th. This is what the stock price did. It basically went from 89 cents to $4, essentially. So had you bought this in October of last year and held it to last week, you would have made 366% return on your investment. So if you would have put $1,000 in here, you would have made 366 times that money, which is an excellent trade. Some people don't. The indices don't do that in a year, in 10 years. So, there are definitely advantages to trading stocks, to being a short-term trader, meaning you buy and sell within a short period of time. So, like I said, in this here, this is a daily time frame, right? And this is essentially a weekly time frame. This is what the stock price did last week. And this is what the stock price did the week before last. And the week before that, and the week before that, and so on and so forth, right? See this big red candle here? This is what the stock price did in February of last year. I'd say 90% of stocks did this, if not 100% of stocks did that last year. So that's when coronavirus came out. There was big, massive selling. But if you were a participant in the markets, you caught it at this point and you wrote it up at this point. So, like I said, you made your 366%. So, this is a weekly time frame, and this is a monthly time frame. This is what the month of January, this is what the stock price did the month of January. The month of January, it opened up at $1.30 and it closed the month of January at $3.03. So for the whole month, it went up 136% in 1 month. Now, this is sort of a unique market that we're in, okay? Things like this don't happen on a day-to-day basis in a regular market, given, the circumstances that happened last year. Given those circumstances, this isn't something that happens, on a day-to-day basis. So don't think you're going to just get this profit day in and day out. No. Okay? And I feel like that's what a lot of people are doing now who may not be, or that's what a lot of people think, who may not have a good, a good track record of buying and selling stocks. I mean, they haven't done it for a while. Okay? So, those 3 time frames, and those are time frames you can look at. Okay? So, let me go back to the daily time frame. So, you have the daily, you have the weekly, and you have the monthly. There's one more. Those are the 3 time. If you are wanting to swing trade, those are the 3 time frames that you want to look at. You want to look at the daily, the monthly, and the weekly. And also you want to look at the hourly. So, anything from an hourly standpoint, moving up to a daily, a monthly, a weekly time frame, those are the time frames you want to look at when you are what they call swing trading. What is swing trading? Swing trading is simply this. You buy a stock one day and you hold it for a short period of time. That short period of time could be a few days, a few weeks, or a few months. Once you get into the yearly range, you have just become an investor, because investors hold stocks past a 12-month period. Traders do not. Traders take advantage of what they call short-term volatility. The short-term trends of a stock. That's what traders focus on. And I keep stressing that because there's a slight difference. It's not a big difference. Whether you're a trader or an investor, you're in it to make money. So we all have that in common. But it's just a time frame that you're looking to buy it and sell it. It changes. So those are the 3 time frames, the 4 time frames that I recommend that people look at when they want to swing trade a stock. Because, like I said, you want to hold it over a longer day range period. Now, when you get into day trading, that's a whole nother ballgame. With day trading, you want to focus on anything that's 30 minutes or below. So let me kind of back up a little bit and go over the major time frames that you can look at a stock and see what the price did within a day or within a period of time. So you have the 1 minute time frame, meaning you can track what a stock does every minute. You have 3 minute time frames where you can track what it does every 3 minutes, every 5 minutes, every 15 minutes, 30, 45, 1 hour, 2 hour, 3 hour, 4 hour, 1 day, 5 days, which is essentially a week, 6 days, which is essentially a week as well. It's represented differently on the chart. Weekly and monthly. And yearly too. You can look at a yearly chart. So, if you are day trading, you want to look at anything under 30 minutes. So you want to look at the 30-minute chart, or you want to look at the 15-minute chart, you want to look at the 5-minute chart, the 3-minute chart, or the 1-minute chart. Those are the different time frames you want to look at stocks. If you are day trading, if you want to buy, what does day trading mean? Definition of a day trader is simply this: someone who buys and sells a stock in the very same day. Meaning when the market opens tomorrow on Tuesday, and if I buy a stock tomorrow morning and sell it tomorrow afternoon, or if I buy a stock tomorrow morning and hold it for 10 minutes and sell it that same day, guess what? That is what is considered a day trade. That is a day trade. And when you're day trading, you are essentially condensing the time frame that you want to buy a stock, hold it, and sell it for a profit. One key thing to point out is this: a trend generally starts on a 5-minute chart. So if you look at this chart here, this shaded section here is essentially when what they call the pre-market and after hours and pre-market. So after hours is basically when the stock market's closed at 4 p.m. Eastern time. Trading still happens from 4:05 to 7 p.m. And when they say the pre-market trading, that means the markets open up at 2 a.m. Eastern time, and the pre-market sessions open up at 2 a.m. Eastern time, and they close at 9:30 Eastern time. I keep getting the time because I'm thinking about Central time. So that's what this shaded section is here. So when the markets open at 8:30 Eastern or Central time, 9:30 Eastern, this is what happened. When you're looking at a 5-minute chart, this is what the price did within this 5 minutes that the market opened. The first 5 minutes that the market opened. Right? It went up and it went down. It basically set a high and it set a low. It just could set a range that it's going to trade in. Right? And then essentially the price never got past the higher part of this range, and it simply traded lower for the day, for this day, which was Friday. Okay? But this is a depiction of, like I said, a 5-minute chart. And if you are a day trader, there are a lot of day traders that look at the 5-minute charts, and they may buy a stock and they may hold it for 5 minutes and they're out. And they've made their money for the day. If you have enough what they call dry powder, aka money, a 5-cent move, or let's say a 10% move within 5 minutes for someone who's, buying a bunch of shares of stock, or, let's say, for instance, if I trade $10,000 in a stock and, it moves 10 cents, right? Let me just break it down like this, because now it's getting into, basically percentage-wise, if you want to make 10% of stock price of $5,000, which is $500, then you can. But that's, and if that happens in 5 minutes, that happens in 5 minutes. But that's what some people do. Me personally, I don't recommend anyone who's new to trading stocks trade on this shorter time frame. So anybody who's new to trading stocks, My recommendation is simply this, that you trade stocks, that you use the hour time frame or higher to buy and sell your stocks. If you try to do it anytime from 30 minutes on down, you're going to, it's very risky, and I guarantee you're probably going to lose money. I'm willing to bet money that you're going to lose money. Okay? Because it's not easy. None of trading is an easy period. The money comes, like I said before when I first started the videos, the money comes easy, but trading is not easy. All right, let's see here. Let me go back here and see if I got any comments. Boom. Boom. All right. Any comments? Any questions, people? Any questions? Any questions? I see that there are no questions, so I will continue. So I covered what are the best time frames to trade for swing trading and day trading. Okay, swing trading, any time frame from an hour on up, so an hour, 2 hour, 3 hour, 4 hour, 1 day, 1 month, 1 week. Those are the time frames, if you're swing trading, that you want to focus on. And there's a way to do an analysis of the different time frames to see, if what the probability is of said stock going up, whatever stock that you're looking at. There's a way to look for that. Or there is a process in that. Okay. Let's see. Stock trading phases. So what are the different phases of a stock that the stock trades in? Because stocks move in phases, right? And there are 4 phases that a stock moves in. Those phases are accumulation, advancing, distribution, and declining. I'll say it again. There are different phases that a stock trades in. There's 4. Those 4 phases that a stock trades in are simply this: accumulation, advancing, distribution, and declining. So, with that being said, let's go over the first one, accumulation. What is accumulation? So let me go back to a chart. That way I can show you a graphical representation of what accumulation looks like. Let's do this. All right. Let me go to a different stock. Let's go to Google. Nah, that's not right. Goog. All right. Actually, I'll stick with Tel. I'll stick with this one. All right, so let's just stick with this one. So the different phases, accumulation. Accumulation is simply this: when, as the stock price rises, as the stock price moves sideways, that's what let me back up. Okay. Accumulation is simply this: when a stock price trades in a range, right? That has a couple definitions. From a definition standpoint of accumulation, when a stock price moves sideways after it rises in price and it moves sideways, that's what you call accumulation. And the reason you call it accumulation is because simply this. When the stock price rose and moved sideways, it had to sort of take a, it sort of took a breather, took a break. You gave time, this is the area where people took profit and the stock price fell and it moved sideways to a certain range. So when it traded in this range was called accumulation after it rose. So accumulation is a good period to look at buying a stock, because essentially if it's a good stock, it will go higher. The price will go higher than its range. If it's a bad stock, it'll go below its range. And I should use that lightly. Good versus bad. Because there's, everybody has the mindset that the markets are manipulated or the game is rigged, and the markets are manipulated. People pay thousands, hundreds of thousands of dollars to program computers to buy and sell stock, to toy with people's emotions. That's one of the dirty little secrets of Wall Street, in my opinion. So, getting back on topic, this is the accumulation phase after a rise in price. Okay? Now, when the price breaks out of its range, it moves from, and this is the range, it moves from accumulation to advancing. Okay? It moves from accumulation to advancing. Now, it's important to pay attention to a stock when it's in this range, when it's in an accumulation range, because as you can see, the price is kept, as it's in this range, when it got closer to this line here, the lows of the price were higher. And what did I say the other day when I covered in the video, when I covered defining a trend? It's more in particular an uptrend. You have a series of higher highs and higher lows. This is what this stock did. It had a higher high than this day and a higher low than this day. So the higher highs and higher lows were an indication that, price, as it got close to this line, could potentially break out and advance higher. And that's exactly what it did. So price went from accumulation to advancing. Now, what's the other one? You have accumulation, advancing, distribution. So distribution is when the prices fall. So when prices fell, when prices fell, they were in a distribution phase. Well, let me back up here. A distribution phase happens after a fall in price. So let me back up here. So this could be considered a distribution phase, because after prices fail, when prices fail, they move sideways. So sideways is the or after prices fall and move sideways, that's what you call a distribution phase. So when prices fall and move sideways, that's distribution. When prices rise and move sideways, that's accumulation. It's important to know these things because
that will determine on if you should be a buyer or a seller. If a stock is in a distribution phase, you do not want to be a buyer, because guess what? That means the price is steady declining. Why would you look to buy a stock if you can get it cheaper at a later date? Doesn't make sense, right? Right. So when a stock is in a distribution phase, that's the time you want to be a seller. You don't want to be a buyer. And how do we recognize the distribution phase? After stock prices fall and move sideways. So stock prices fell and move sideways, that's distribution. Now I know you see this long candle here, you have that spike, but that's one day. Okay? That's one day. And you have to be really good to catch that. It's like catching lightning in a bottle. Right? So distribution phase is after prices fall and they move sideways. Sideways movement after prices fall is what they call distribution. Now, the last phase is called declining. What is declining phase? Declining phase is simply when you have just a bunch of selling and the stock price just moves in a downtrend. So this whole period of time is what you would call a declining phase. Even though you had these short bursts, like I don't know what you call those machines that you monitor your heart in the hospitals. Boop, boop. Basically, if this is the heartbeat of someone, yeah, it's probably not a good look. But, hey, that's here nor there. I'm not talking about that. I'm talking about declining. So declining phase is when prices are in a downtrend. Advancing phase is when prices are in an uptrend. So, to recap, here are the two phases that you want to look for when you're a buyer. You want to look for, when you're looking to buy a stock, you want to look to buy a stock when it's in a accumulation phase after the prices have risen and you see signs that the price is going to continue higher after, once it's, as it's in that range, you kind of just see the price trending higher. You still want to be a buyer because the trend is up. Remember the saying I said the other day, last week? The trend is your friend. When the trend changes, that's your friend. You can hold it through all the whipsaws, through all the fluctuation period, right? Now, that's when you want to be a buyer in an advancing and accumulation phase. You want to be a seller in a distribution and declining phase, meaning stock prices fell, they moved sideways, right? And they started to trend lower, indicating that price is in a distribution phase. So that's what I covered. Those are the four stock phases. And a little pro tip that I wanted to cover. Pro tip. As my mentor says, as one of my mentors says, when a pro tip is given, you definitely want to write this down. A pro tip is simply this. It's something that's sort of key to look for when trading a stock. So the pro tip is this. When you can have a good company, okay? You can have a good company stock, or you can look to buy, well, let me back up. A good company in a bad sector is can be at times worse than having a bad company in a good sector. I'll say it again, because I know it might sound a little confusing. You can have a good stock that's in a bad sector and lose money versus having a bad stock in a good sector and make money. You say, well, why is that? How can that be? That doesn't even make sense. Well, here's another little tip for you. 50% of a stock's price movement, 50, half of a stock's price movement, meaning if a stock, like that stock we looked at, Tellurian, that stock moved 366% in the past 6 months. I'm not saying they're a bad stock. I don't even know what I think it's a biotech company. But case in point, I guarantee you whatever industry that company was in, or sector that company was in, that industry or sector the company that was in, I guarantee you was positive over that 6 month time frame. Because half of that move was because the stock was simply in a good sector or a good industry. And when I say industry or sector, I simply mean a basket of companies that all have similar business models. They all have similar products, varying here and there, but they're all in the same business. So I guarantee you that the stock was in a sector that was positive, meaning, instead of being down 10%, the sector was probably positive 10% or more. And that's the pro tip that I want to give you guys. So one little secret to look for when you're looking for a stock is look for stocks that are in good sectors. If the sector is up 10%, and that's a good barometer, a sector that's up, 5% or more. It's a good barometer to use when you want to look at sectors or industries. So if the industry is up, that's a good place to start looking for a stock to trade. Okay? Now I want to go over one more thing before I go. I want to go over a website that you can use to look for stocks. Because, like I said in the beginning of the broadcast, you're only as good as the stocks you trade. If you're trading trash stocks, you're more probably the likelihood of you having a good trade is lower. So the stock that I talked about, FinViz, that's a good stock a good website to go to. Let me get to my browser here. That will be a good website to go to search for a basket of stocks. Okay. So, here is FinViz. And if you click on, I'm going to go here. I've already got a bookmark for it, but you click this button here, Screener, it'll take you to this page. Let me do this, bookmarks. Yeah, I got a lot of bookmarks. Don't judge me. Don't judge me. I got a lot of bookmarks. So it'll take you to this page here, and on this page, you can search for stocks that meet different criteria. From a fundamental perspective, meaning earnings per share, PE ratio, all the fundamental numbers that people look for, outstanding shares, things like that. Or from a technical standpoint, what's the beta of a stock? What's the RSI of a stock? What's, as says, asks, hey, are there different, are there patterns, price patterns that I look for? There are. And you can search for those here too. One in particular that I like to trade a lot of times is what they call an ascending triangle. And essentially what that is where price moves, actually it was on TELL, TELL. If you look, if this is an ascending triangle. So essentially this is the triangle, this is the top side, or one side of the triangle. Let me do this. Trend line, there we go. So that's the top here, and if I do that there, I hate that they do this. Okay, there we go. And it's not a perfect science, so, nothing's going to be perfect. But you get the point. Essentially, this is an ascending wedge. Price moves here. It basically traded within this range, and as it got to the top of this range, it broke out. That's what you call an ascending wedge or an ascending triangle. That's, So that's one pattern I like. But you can search for that here. It'll pull up any stock that fits that pattern, right? This is a good website for, people who are just starting out. I highly recommend it. It's free. You don't have to pay money for it. The more advanced or the more you get into trading, there are sites out there that, you have to pay a subscription fee that give you, even this site, for the elite, for the more advanced features of this screener, you do have to pay a fee for that. But there are other sites that provide it as well. I do recommend that, like I said, for starting out, people can come to this site and they can put in anything that they want. And like I said, looking at some of the things that we talked about, earnings per share, you can look for that here. So if I go fundamentals and I go earnings per share growth this year, I can do over 20%. I can look for earnings per share growth for over the next 5 years. I can do earnings per share growth over the next year. That's for this year, over the next year. So, following year or 5 years from now. Whatever I want to do. And remember, like I said, earnings per share, you want to look for something to 18, 20% or more. So that's generally a good starting point. Okay. What else? Institutional sponsorship. Let's see here. I believe that institutional ownership. Like I said, you want something over 20%. And it didn't pull up anything. I probably have too rigid of an indicator. Let's see. Technical. Oh, ascending. So let's take that out. There we go. All right. So basically, this company here has an earnings per share growth this year over 10%, and they have over 20% institutions that are buying it. And look at the stock. Look what it's doing. After the stock came off of its lows, what did it do? And I would consider this to be some of the lows. It went up. So there's validity in looking for companies that have over 20% institutional sponsorship and a good earnings per share growth rate. So, like I said, I highly recommend people come to this site, finviz.com. Like I said, you click on stocks, or you click on screener, it takes you here, and essentially you can fill out different things that you want to look for and have it return to you a basket of stocks based on whatever criteria you've established. Okay? And that's it. That's all I got tonight. That's all I got. I enjoyed covering all of these things. You know, I enjoy the markets. I enjoy teaching people, honestly. I really do. I really enjoy teaching people. I was recruited to be a teacher at one point in time as well. But, you know, I hate to say it, teachers don't make any money. And I'm sorry, but, you know, coming from an industry of IT over into teaching, on that level, from like a school level, it just didn't appeal to me. But as I get more into, you know, teaching on my own terms with trading and things along that lines, and eventually, you know, my goal is to move away from the 9 to 5 thing and just primarily do this and trade the markets. That's, you know, ultimately what I want to do. When I get to that point, like I said, I'll definitely get more into the teaching side of it, even on a school level, because I would love to teach, you know, young kids how to trade, what things to look for. Because just imagine, the younger they can get this information, the younger children, the younger someone is at getting this information and getting the good parts of the information, because there's a lot of information out there, but the information that's meaningful, getting that information, the younger that you are, the more time you have to utilize it. The more time you have to utilize it. So when you're at, you know, 30 years of age, 40, or at my age, 42, you know, you can be that much further along with investing and trading. And trading the markets is something that can change your life financially, right? It's something that can change your life financially. And that's I'm all about life-changing events for people on the positive side. The more I can help you become better, the better I become. So everybody wins. So, are there any other questions this evening? Looks like I had a few down times where I was having some connection problems again. Still working through that. However, I thank you all for people who are tuning in. I thank you all for tuning in and rocking with me. Hey, what's going on, cuz? I see you. Good evening. But yeah, so color background tonight is blue. Markets were closed, so blue is sort of like a neutral color that I'll be using. Or if the markets are closed, green, of course, the markets are up. Red, markets are down. Blue, the markets are flat, or the markets are closed. So Questlove and Black Thought, you know, they're in the background chilling, watching me teach stock trading as well. But like I said, trading the markets is a very lucrative thing. I do recommend that people get into trading. You know, I'll have some books that are good for trading on the next broadcast as well. So my next broadcast will be this coming Wednesday at 6:30 p.m. This coming Wednesday at 6:30 p.m. Same bat chime, same bat channel on Facebook. Maybe I'll have some music playing in my intro next time too, as I'm getting more up and running into the lives and just even making a video in general. You know, there'll be a little bit more production around the videos and things like that. But keep the main thing is the content. Content is simply helping people become better at trading stocks. And you have to have a good fundamental base before you can have a more advanced base. You gotta crawl before you walk. Any questions, everybody? Any questions? Looks like I have no questions. So, I think I've been on for an hour and 20 minutes. I think that's a good enough time. I've rambled on enough. So, I want to thank everyone for coming out tonight. Or not come, you didn't come out anywhere. I want to thank everyone for tuning in tonight on the broadcast. I appreciate it. It will be up on my Facebook page, and I will be getting my YouTube page up and running this week. So, also, like I said before, I will be back online this coming Wednesday at 6:30 p.m. As far as topic-wise, I think I'll cover some more fundamental things about the markets, because trading is more of a game of controlling your emotions and having patience than anything else. All the technical stuff takes care of itself. All that stuff takes care of itself. They are what they are, the technical stuff. But the why the markets move, the way they move, that's what you want to know. That's what I want to help individuals build a good foundation of the why. Why markets do what they do. Because if you understand the why, the how will come easy to you. Understand the why first. The how will come easy. People are so quick to jump in and just get started, but you gotta slow down, pump your brakes. You gotta crawl before you walk. So make sure you go out to finviz.com. Also, I do want to say this. I failed to mention this. I also have a website, people. I do have a website. Yes, I do. Let me actually go to it. www.seekingvalueinvestor.com. I do have a website. Now, why do I have a website? Well, for one, I have a website to help people, to provide value to the marketplace, to not just be a taker, to be a giver to the marketplace. So that's one reason why I have a website. Two, being that I enjoy analyzing stocks, I'm an analytical thinker. That's how I like to think. I enjoy doing it. And the famous tagline, if you enjoy doing something, you'll never work another day in your life. Well, this isn't what I consider to be work, because I enjoy talking about the markets. I enjoy researching the markets. I enjoy studying the markets. So I came up with a website, and let me get to it here. The web address is... sorry. I think I hit the wrong button. Actually, wait a minute. All right. So, like I said, let me get to the site here. The web address for the website is, drum roll please, seekingvalueinvestor.com. Right? This is my website, seekingvalueinvestor.com. The web address is www.seekingvalueinvestor.com, all one word. Now, the site is geared towards individuals who, you know, one of the main questions I get from people who find out that I trade the stock markets is, hey, what's a good stock to buy? And that question is, there's no easy answer for that stock or for that question, because there are literally hundreds, thousands of stocks that you can buy. Now, granted, there are only a select number of them that actually move on a day-to-day basis. However, you know, case in point, or, you know, just however, that's the question I get. So when people would ask me that question, I thought, you know what would be good? It'd be good if I came up with a website where people can subscribe to the site and get picks on a week-to-week basis on what stocks they can pick to buy and sell. And I thought, you know what? Hey, why not? You know, I already enjoy doing the work. Because, like I said, I literally every weekend, I sit down on the weekends and I go over my stock list, my filters that I have to look for stocks, and I make a customized list of stocks to watch for that next week. You know, because I do buy stocks from week to week. So I figured I'd come up with a site. And on the site here, basically, just kind of gives you an overview and of what I do or what the site's for. Like I said, worry-free investing. We give you your time back to do the things you want. We meaning me, you know, because some people may not want to spend a couple of hours, you know, researching stocks. They may not like doing that, and that's okay. You don't have to. You don't have to be, if you know the basics, you don't have to be someone who, you know, you don't have to be someone who has to sit down for hours and hours on end to find stocks. Hey, that's what the site is for. You can come here, you can join, you can become a member. You know, it's a great value for you. In the site, I give people, you know, like I said, a list of stocks to buy and sell. I tell you where's a good area to buy it, where's a good area to sell it. Simple. All you got to do is, knowing the basic fundamental things, all you have to do is match up the amount of money that you want to put into a stock and figure out if the share price is something that you want to buy. It's simple. So, this is a site that I created, like I said. It's a membership-based site. It's $29 a month. That's less, you know, and I know some of you people go to Starbucks religiously, okay? Some of you people drink coffee like it's water. So, however, like I said, it's a great value, okay? For those looking to, like I said, they don't really have an idea of what stocks to buy. As they're learning how to trade stocks, it gives them a good basket of stocks to choose from to actually buy and sell and make some money while you're trading. So the site is essentially training wheels for individuals who want to learn and make money as they learn. Or the site is simply for people who, you know, don't really want to get into the nuts and bolts of trading. However, they know fundamental things, and they just want to know something that they can buy and sell it. That's what the site is for. That's what I'm here for. So, wanted to cover that. Like I said, this is the site. I'll put it in the comments section. www.seekingvalueinvestor.com. So, that's what I got. As I said before, I'm about to put the name of the site in the comments section. Well, I'll do that later because I want to add a little blurb to it. So, again, thank you everyone who tuned in this evening to watch the broadcast, to get some great information, some key things that you'll want to know in looking for stocks and how to pick one to buy, the different phases that a stock goes in. You know, this is valuable information that everyone needs to know. Everyone needs to know this information. So continue to like, share the video, and I will see you, everyone. I will see everyone Wednesday, this coming Wednesday. Like I said, I'll be back on this coming Wednesday at 6:30 p.m. And I see you later. I'll see you later.
Siri, what time? Hey Siri, what's the temperature outside?